I lost money on this stock. I had taken this trade on 19th of March. So this chart is more than 3 months old. So as per the SEBI regulations, we are allowed to discuss this chart. As you can see, it's a very risky base. I knew I was getting into a risky situation, but I still decided to take the trade because I wanted to test the market. I wanted to test the stock. So this video is more about how to take a test position. I bought the stock and sold it on the same day because I knew I was getting into a risky situation. We will discuss the technicals. I have taken screenshots of uh, the stock chart, market smith chart at the time that I took the trade. So thankfully we have that data. And I wanted to discuss with you the importance of taking test positions and what conclusions to draw out of those test positions. Okay, so let's draw this base. This is a daily time frame chart. This is Aarti PharmLabs. So as you can see here, the high of this bar is 784.50. High of this bar is 784. So there are 4 points in the base. Point 1, point 2, point 3, point 4. What's the problem with this base? Well, no green zone closing. After point 2, there is not a single candle that has closed inside the green zone. Forget about closing. The candle has not even gone into the green zone, not even touched the green zone. Even forget green zone, even blue zone, it is struggling. So it's a very risky trade. I knew I was getting into a risky situation, but I still took the trade because I wanted to see whether stocks are breaking out of the blue zone. The only way to know if stocks in a given market condition are breaking out of the blue zone is by taking test positions in those stocks. What is a test position? Well, it could be one quarter of your normal position. So if my normal position is 10%, then my test position would be 2.5%. In this case, I used a variation of a test position. I took a normal position size of 6.25%, but I decided that I will exit the same day quickly if the stock doesn't go in my favor. The benefit of doing this is 6.25 is a good enough position size. If the stock truly goes up, you are onto a stock with a very early entry. But if the stock doesn't go your way, you don't lose much money, maybe 0.1, 0.2%. I think I must have lost around 0.1, 0.15% on my portfolio on this stock. It's worth losing that much money just to understand that stocks are not breaking out of the blue zone in current market conditions. I'm talking about March. April, May, and June I cannot discuss because there are SEBI regulations. But March I can discuss. So the high of this bar, high of this candle, 784.50, that's the buy point. That's the buy point. As you can see, another risk factor is the yellow line is in the blue zone and the latest closing price is in the red zone. The distance between closing price and yellow line is less than 5%, which is good enough. Okay. We want that to be less than 5%. Now, why did I select this stock in the first place? Of course, it is in a confirmed stage 2 uptrend, as you can see from the moving averages. The volume inside the base is low, which is good enough in our favor. What is not in our favor is the green zone closing. Going back to the screenshots that I had taken. So at the time I took the trade, market was in a confirmed uptrend. It's a market leader. Aarti PharmLabs comes in at number 2 in terms of market capitalization in its own industry group. I think the industry group name is Medical Ethical Drugs. Okay. The margins were improving. Industry strength was declining. Okay. So, which means in comparatives, the price strength was in my favor, the buyer demand was in my favor, probably the industry rank was in my favor, but the improvement in industry rank was not in my favor, and the industry leadership was in my favor. Okay. So, liquidity was fine, comparative analysis was okay, technical analysis, as you can see from the chart, it's okay, no problem. Only thing is that it has not closed in the green zone. That doesn't mean you reject the stock. Fundamentals were not okay, so this is a swing trade. Uh, Less than 7 out of 12 criteria were satisfied, so fundamentals are not in our favor. Market condition was in a confirmed uptrend. I have written notes here, bought half of 6.25% and sold on the same day. So sorry, I did not buy 6.25%. I bought half of 6.25%, which is truly a test position in principle. So I bought 3.125% in this stock and sold on the same day. Why do you think I must have bought 3.125%? Well, because of the green zone closing. I just wanted to test whether such kind of a stock will go in my favor given the fact that it's a market leader. But then I realized that it did not go in my favor, which means what? What's the conclusion? A market leading stock, which comes in the top 3 or 5 in terms of market capitalization, if a market leading stock, which does not show green zone closing, if that kind of a stock is not going up, imagine what will happen to those stocks which are not market leaders and which are not showing green zone closing. Okay. That is the kind of conclusion you need to draw, that this makes you a flexible professional stock trader. I would take a normal position on this stock when if the market conditions were lenient or forgiving or favorable. Okay. If I get the same pattern, same data, same everything, I would take a normal position simply because the market is favorable to those stocks which are market leaders and they need not necessarily show green zone closing. Okay. So different market conditions warrant that you think differently. You cannot think the same way in different market conditions. That is why I keep emphasizing the point about flexibility. I would have put a lot of money in this stock if the market conditions were favorable. Okay. Coming to the market Smith chart. So I had taken the screenshot here. See, I had taken the screenshot. Notice that this relative strength line is declining inside the base. That is again another factor which is not in our favor. There is a blue dot inside the base. That is good thing, but it's declining. The volume is below the moving average, which is in our favor, good enough. And the stock was coming out of, I think, must have been base number 1. I don't remember. But see, relative strength 90, buyer demand B, group rank 20, but this was not improving. So maybe it went from 10 to 20, not a good sign. And it's a market leader. So the comparatives of this stock were very strong. Okay. Liquidity is fine. Millions of shares traded. It's not a penny stock. So liquidity is fine. Comparative, as you can see here, it is fine. No problem. Technicals, there is an issue. There is no green zone closing. The relative strength line is declining. Correct. That's the problem with technical. But still, it's not bad enough to reject the stock. Fundamentals, well, have a look at this. No acceleration in EPS latest 3 quarters. Sales not 25% and no acceleration again. Return on equity is less than 17%. Earning stability is more than 25, which is not in our favor. Annual EPS looks fine. EPS growth rate looks fine. Margins look okay. Fundamentally not in our favor, right? That's another problem with the stock. Market was in a confirmed uptrend. And make sure you click on consolidated here. Don't look at standalone numbers. Okay. So that's the chart on MarketSmith. That is what I see on MarketSmith chart. So if you notice the funds, number of funds that have put money in the stock, hardly any change in the quarters. So not very exciting. Okay. Here it shows the top three stocks by relative strength. Aarti PharmLabs comes in the top three, which is good enough. So this is the data. This is what I see on the MarketSmith chart. It's not rocket science. Just a few basic things I see. So coming back to the notes that I had taken, liquidity fine, comparative extremely good, technical there is some problem because of the declining relative strength line, no green zone closing, prices in the red zone, and the buy point is in the blue zone. Only one candle closed in the blue zone, correct? Those are the technical problems with the stock. That is why a test position was taken here. Fundamentals not okay. Earnings, sales showing problems. Return on equity is also poor. Earning stability is also not in our favor. So that's a problem. Market condition confirmed uptrend. Took half position, right? And lost money. Look what happened the next day. I will not move the price forward. I will just move it one day forward. So as the stock entered, hit the yellow line, I bought the stock, put 3.125%, but then it started falling and I must have sold somewhere here. I don't remember exactly. But I must have lost like 0.1 to 0.2% of my overall portfolio. No, not even less, not even that, even less than that, because I took 3.125%. So really a test position, a tiny position. The conclusion that we draw from this kind of a test position is do not buy stocks which are not showing you a green zone closing and which are showing declining relative strength in the base. These are the two conclusions that we can draw for that market condition. Okay. If market conditions were such that stocks with declining relative strength were going up, stocks with no green zone closing were going up, in such conditions, my mind would think very differently. The strategy, the base drawing, the colors, the trend, everything remains the same, but the way I'm approaching becomes very, very different. So that's called flexibility. This was in 2025. Okay. If this was in 2023, 2022, 2023, especially late 2023, when the market was conditions were very strong, the stock would have probably gone up and sustained there above the yellow line. The probability was very high. But here it did not sustain. It touched the yellow line, came back. That's called a fake out, that too on high volume. So that is deception. That's a market trap. And I will not move the price forward because that would be a violation of regulations by SEBI. But you can check the chart of check out after this what happened next. Okay. So this is the stock which I wanted to discuss with you, a trade that I took on 19th of March. I also, I think, discussed with you Vijaya Diagnostics. That too was a market leader, but that was a bad trade. I really made a mistake in that trade. I should not have taken that trade. I wouldn't even call it a test position. So that's a mistake that I made. I think I took one more trade, Navin Fluorine. Yes, I discussed Navin Fluorine also. I think I took that trade on 20 in the third half. Sorry, in the later part of March. But that was a break-even trade. I did not make money on that stock. I did not lose money on that stock. It's just that the stock was not moving for 6 or 7 days. So I came out nearly at break even. I must have lost maybe 0.01 or 0.05%. on that trade, but it was almost break even. So you see, when I'm losing money, I'm losing very small amounts of money. But when I'm making money, I'm allowing the profit to ride. Okay. So that's a trade that I wanted to discuss with you. So many learnings from this trade. If you simply understand the concept of green zone closing, allow the stock to go up. Like, for example, 1, 2, 3, 4, 5, 6, 7, 8. When you see that kind of a movement, then you have a proper buy point. But see here, it's very premature to buy the stock. If you simply understand the concept of green zone closing, you will save yourself a lot of headache. If you simply understand the concept of leading stocks, the top 3 or 5 in terms of market capitalization, you will save yourself a lot of headache. If you simply understood the concept of declining or rising relative strength line on the market Smith chart with a blue dot, you will save yourself a lot of headache. Okay. So I hope these few tips and few ideas are very helpful to you. I hope you will apply them in your trading. If you are buying a stock with no green zone closing, you are incurring additional risk. You need to be aware of that. I am not saying don't buy the stock. I am saying if you buy the stock, you should be aware that you are taking risk. Because only when you are aware can you control your position size and your stop loss. Thank you so much.